Alright, so good afternoon everyone and welcome to another training session. This will be our second training session for Danuve CryptoBots. My name is Daniel Ivitesi and I'm the CEO and the Chief Programming Officer at Danuve CryptoBots. So in this training session, we are going to be looking at 4 topics, and the first topic is sports and futures trading. So we are going to be looking at the difference between sports and futures trading. And the second topic is going to be using the bot signals. So we are going to be going into the bot signals, how to use them, how to trace them on the chart, and how to enter, or rather how to calculate our entry after we have received the signal from the bot. Okay, so that's the second topic we're going to be talking about for today, which is using the bot signals. And then the third topic we're going to be looking at is the primary signal. The primary signal which the bot is going to be giving us. So there are so many signals that the bot gives us, but the primary one is what we're going to be talking about in this video. Also be aware that this is just a summary video of what happened in the meeting that held for 1 hour today. The meeting is already over, but this is just a summary video, just to summarize what we talked about in the meeting today. And the fourth topic we're going to be looking at today is called trading sessions. We have different types of trading sessions in crypto trading, forex trading, any type of trading, equities trading. So we're going to be looking at it in general and how it can also affect the signal that comes from the bot. Okay, so let's just go right into the video. And we'll start with the first topic, which is spot and futures trading. So let me just go down. Okay. So this is spot and futures trading. So as you can see, it says spot trading, buying and selling the actual coin. So when you buy, you are purchasing the real crypto asset, for example, BTC, ETH, or Solana, directly from another trader who wants to sell. So when you come to a cryptocurrency exchange and you want to buy the original asset, the actual coin, that is, you are buying it on the spot market. Now, what the exchange is going to do for you is going to look for a seller who is willing to take the other side of your trade. So since you are a buyer, you want to buy, let's just say, Solana now. The exchange is going to match your order with somebody who is willing to sell Solana to you. So when you give the person your USDT, the person is going to give you their Solana. That is called spot trading, which means you are trading on the spot market. So when you sell, someone else on the exchange is buying what you're selling, basically, and vice versa. So the exchange like Binance or MEXC doesn't sell to you. So this is another important point. Binance or any other crypto exchange, they don't sell the coin to you. They are simply connecting you with the seller and the buyer. So since you are a buyer, the exchange is going to connect you to a seller so that the seller can sell the coin to you and then you pay them money. So that's why it says like Binance or MEXC doesn't sell to you. It only matches your order with someone else, like I've said before. So let's move on. A market buy order gets matched with the lowest available sell order. As you can see, the lowest available sell order. So when there is an available order, the system automatically matches your buy order with that sell order, and then you can transact with that person, and it happens simultaneously. The same thing here, a market sell order gets matched with the highest available buy order. So that's just how it was. That's why it's called a cryptocurrency exchange. They are just a middleman. Okay, their job is to ensure that there is no fraudulent activity, and the buyer pays the seller, and the seller releases the coin for the buyer. That's just how it works. So you own the asset after buying it. It is stored in your wallet. Many of us might know what a crypto wallet is. It's a specially designed wallet that holds cryptocurrency assets or digital assets. So you can hold it, send it, or sell it at any time. Okay, so that is for spot trading. I'm just trying to make it as brief as possible. So the next one we'll go to now is futures trading. As you can see, in brackets, we have buying and selling price contracts. Now, futures trading is quite different from spot trading. In spot trading, we said we are buying the digital assets. But in futures trading, we are not buying the digital assets. What we are buying now is a price contract. And if you are someone that is familiar with this, they will call it perpetual futures contract. So now, in futures, you don't own the actual coin. You trade contracts that represent its price. So you can see that. It's a contract that represents its price. So the contract you are buying is what actually gains value, not the coin that you are actually buying. It's just the contract you are buying. Now, here's how it works. If you go long, when we go long, we have two different types of contracts you can buy. You can buy a long contract or you can buy a short contract. Now, a long contract simply means that if the price goes up in the future, the contract you have bought is going to gain value because you went long. So if you are going long and the price goes up in the future, you are going to make money. But on the other hand, if the price goes down in the future and you are going long, you are going to lose money. So you have to be very, very careful of the types of trades you are taking in futures trading. And then if you go short, you believe the price is going to fall. So if you believe that the XRP is going to fall in the future and you buy a short contract or a sell contract, if you buy a short or a sell contract, that simply states that you actually want the price to go down. And if the price eventually goes down, your portfolio is going to make money and it's going to be added to your account balance. So basically that's just what it is. So your trade is matched against another trader with the opposite view. Your profit is their loss and vice versa. So what this means is, if you are going long, you are buying a long contract, which means you expect the price to go up. And for any reason, the price begins to devaluate, it starts coming down. The money you are losing is going to be paid to somebody who actually got it right in their calculation. That's what it means. So if you are seeing a minus on your account balance, what it simply means is that you made a miscalculation and money was deducted from your account. Now, that money that is being deducted from your account is going to somebody else who was correct in their calculation, and it credits their account. That's how it works in crypto futures trading. So it says your trade is matched against another trader with the opposite view. Your profit is their loss and vice versa. That's why futures markets are called zero sum. Money flows from long positions to winning ones. Exactly my point. So if you are, on the other hand, looking for a short trade or a sell trade and you believe the price is going to fall, if the price actually falls and goes in your direction, it is going to calculate the people who took a short trade and the price didn't actually go down. Sure, you understand? If they took a short trade and the price didn't go down, it is going to take that money that they lost and come and pay to you. That's how it works in futures trading. So that's why it is very, very, very important. It is very, very important for you to calculate very well before you go into futures trading, because futures trading is even more riskier than trading on the spot market. Because the spot market, you are just buying the coin. And on spot market, you don't have long and short. You just have buy and sell. Buy means you buy the coin. When the price goes up, you want to sell it back to whoever is going to buy it from you. That is how spot trading works. But futures trading, there are a lot of risks involved. As time goes on, we're going to be looking at the risks involved in futures trading. So, let's just move on. In simple terms, in spot trading, you buy and sell with other traders and take ownership of real assets. In futures, you buy and sell price contracts, not the actual coins. And your profit or loss depends on price movement, as you can see. So the contract actually gains value when the direction in which you place your trade is actually going. It's actually making progress. So if you bought a long contract and the price is going on, that contract you bought will not be at the same value again. The value will be changing as long as the price is going up. So if you bought Bitcoin, or let's just say you bought Solana at $200, you bought a long contract of Solana at $200, and the price now gets to $220, that your contract has gained value of $20. So whatever risk you put on that contract is going to pay you times the amount of points you gained as evaluation. So that's just what it is. So the exchange is just the middleman. The exchange is just the people that will take your order and fulfill it in the market, that connects both sides and ensures every transaction is fair and instant, like I said. So that is just the work of a cryptocurrency exchange. So their job is just to regulate, make sure that there is no fraud. The buyer pays the seller pays the buyer. The person who buys the long contract, if that person makes money, he takes it from somebody who bought a long contract at the wrong time and who made a miscalculation in his trade. And when that account gets debited from his account, when that money gets debited from his account, he is paid to you because you were the one that made the right calculation. Because we said you bought a contract for long, which means the price will go up. You were correct, and then the person who was incorrect, they debit that person's account and pay to you. So that's how it works with futures trading. But as time goes on, we are going to be looking deep into it, and we can know how we can benefit from it. So I think that rounds up the first topic for this training session. Let's go to the second topic, which is using the bot signals. So we go to the second topic, which is using the bot signal. Okay, so using the bot signal and chart analysis together. So step 1, understand the signal you receive. Each signal from the Nuvei Crypto Bot is a message from the market. Here's what the common ones mean. Signal meaning what you should do. Manipulation detected. The market just swept stop losses, liquidity grab. Wait for a reversal, strong moves often start here. Now, in our last training, we talked about manipulation. And we said manipulation is simply a dispute or a trade war. Now, when the bot sends you a manipulation signal, it's simply telling you that you should take caution. And at that point in time, you should not be entering a trade because there is a serious dispute going on between the big players and market forces. So that's why I said the market just swept stop losses. And, and that's why it says wait for a reversal. So whenever price is going to make a very strong move, there is always manipulation at some point. That's why in trading in general or in the market, we have 3 phases in this market. We have the accumulation phase, we have the manipulation phase, and then we have the distribution phase. So as traders, we only look to participate in the distribution phase. That is when price is actually moving, when price is changing direction. That is when we want to, participate. Only when price is moving and when price is changing direction. So strong moves often start here. Exactly what I said. So before a strong move occurs, there must be a manipulation before a strong move occurs. So, and the strong move will occur after the dispute or the disagreement has been resolved between the big players. So they have now come to a general consensus and they have decided where the price will go next. That is what is called distribution. So when they've made that decision, then the distribution phase take place. So we go to the next one, change in direction, potential. Now, markets may soon reverse direction. Watch closely, wait for confirmation. This simply tells you that, okay, the bot is telling you that the market may soon change direction, but it's not confirmed yet. So, but it's just telling you to just keep watch and just pay attention. But don't trade. Pay attention, but don't trade. That's for potential. Then for confirmed, change in direction confirmed. The trend has likely changed. Look for entry in that direction. So this is a confirmed signal. So you can now start checking the price to see, okay, is there movement? Is there no movement? You now want to know, okay, I think the price is moving now. I think I can enter my trade now. That's what it's called, change in direction confirmed. So the trend has likely changed. Look for entry in that direction. So that is price action. So that's change in direction confirmed. And we go to the next one, price action speed alert, volume. And momentum, volume and momentum are high. Expect fast moves, confirm before entry. So when this signal comes, it's just telling you that there is a lot of buying and selling activity right now in the market, and you should be expecting moves to continue or slow down. So this is one that you also need to pay attention to. And then the daily direction. The daily direction just tells you the outlook, the overall look of the market for one day. And like I said in the last video, it usually comes out 1 a.m. in the morning. So by 1 a.m. you should be able to determine, the outlook of the market for the day. Is it bullish or is it bearish? Are prices going up or are prices going to fall? So we go to the next one, that is step 2. Now, tracing the signal on the chart. This is also very important. So when the signal pops up, note the pair and time frame. So when the signal comes up, it's going to come with a currency pair, as you can see in the example, BTC, USDT, and it will come with a time frame. Now, the time frame is what you are going to use on the chart, because you are going to open a BTC, USDT pair on the chart, and you are going to select the time frame from maybe 1 hour, 4 hour, and select it to 15 minutes. Because our crypto bot analyzes the chart with 15 minutes time frame. It uses 3 time frames actually. It uses 15 minutes. Sorry. It uses 15 minutes. It uses 4 hour, and it uses 30 minutes. So the next one is open your chart on TradingView or your exchange. Then use the time shown in the signal to locate that exact candle. Now, this one is another important one. Now, I know on TradingView, the time zone on TradingView is like 1 hour behind Nigerian time. So if the signal comes around, let's say 10 o'clock in the morning, which means on TradingView is going to be 9 a.m. on TradingView, because TradingView is 1 hour behind. So please take note of that. Now, watch what price did before and after the alert. This helps you see why the signal was triggered. Exactly. So step 3, what to look for on the chart. Once you find the candle where the signal appeared, check, did price break above or below? I'll take it again. Once you find the candle where signal appeared, check, did price break above or below a recent high or low? Now, let me try and explain this. So, did price break above or below a recent high or low? Now, when price is coming down, it's going to be giving you a series of highs and lows, lower high, lower low. Now, if price is going to reverse, it's going to break past a lower high, which means as the trend is forming, it's going to go up and break past a lower high. That indicates that there is a strong move to the upside, which means the market is likely reversing or changing direction. That's what it means by did price break below or above. Now, the second question is, was there a sharp weak liquidity sweep? Now, whenever you see a candle that is very long and you see a pin, I will show you what a pin looks like on the chart. It's a very long candle with a very long pin. When you see something like that, that's the presence of manipulation. So all these things, you are going to be looking out for it before you place a trade. Now, did you see a strong candle close in the new direction? Which means If prices are coming down and there is a very long candle without a pin, that indicates a very strong candle, a very strong move, meaning that a lot of sellers are in the market and they are driving the price down. That's what it means by, do you see a strong candle close in the new direction? Now, was there high volume or strong momentum? Now, volume simply means the amount of orders being placed in the market at a particular point in time. And momentum simply means how fast the price moved from one price point to another. That's what is called momentum. So, if you see this together, it's a strong setup. So all these things we are looking at for now is what is going to tell us whether the setup is strong and is going to follow through, or whether the setup is not strong enough. So we go to the next point, step 4, which is confirm with the daily direction. Always trade with the trend. If the daily direction is bullish, focus on buy signals. If it is bearish, focus on sell signal. I think that is straightforward. So let's go forward. When both the signal and daily direction agree, that's your best chance for profit. All right. Well, we go to step 5. Practice daily. Obviously, you have to practice so you can be familiar with the system. You don't want to make a mistake when you're using real money. It can be very disastrous. So that's why you have to practice. Every time the bot sends a signal, go to the chart, find the candle and study what happened. Learn to recognize the same patterns with your eyes. This is how you grow from depending on signals to understanding the market. Exactly. So every time the bot sends you a strong confirmed signal, please take note of the time frame it came out, the time it came on Telegram, and then the coin pair, whether it is ETH, Solana, Bitcoin, XRP. Take note of it, then go to the chart and trace it exactly. So quick tips, don't rush to enter every signal, always confirm. Like I've said before, confirmation is key. Please do not enter a signal except it is confirmed. Volume and momentum increase equals a stronger move. That's it, straightforward. Practice tracing signals daily for at least 10 to 15 minutes. Very important too. You can practice for more than 15 minutes, let's say 20 minutes, 30 minutes, or even 1 hour, just to gain mastery. Stay consistent. That's how traders master timing. Exactly. So that's the end of the second topic for today, which is using the bot signal. Now, the third topic for today is going to be the primary signal that comes from the bot. So now, the signal that every trader using Danuvie Crypto Bot is required to take as a priority, which means this is the signal that when you see it, it should tell you whether you should enter a trade or whether you should wait for a while. This is the determining signal. That's why it's called the primary signal. So now we are going to the primary signal that every trader must look out for if they are going to make a trading decision. So this is what we're going to talk about next. And this is it, what the bot scans for before sending a strong confirmed change in direction signal. Now, the name of the signal is called strong confirmed change in direction. I will take it again. Strong confirmed change in direction. Now, whenever you see this strong confirmed change in direction, this is when you should get serious and say, okay, this is the time you should get serious and say, okay, I think there's something happening in the market. Let's see what I can do. Am I waiting for a while or am I entering immediately? This signal is going to determine that. Now, when you receive this alert, it's not just random. It means several key conditions were aligned, which means the bot, based on the criteria and the programming we have given it, it is calculating a series of criteria. And until those criteria are met, it will not send you this strong confirmed change in direction signal. It won't send it to you. So it means several key conditions have aligned. Here's what the bot looks for before confirming that the